Please go ahead and start.
All right. All right. Welcome, everyone. Good morning once again, ladies and gentlemen. You're welcome to our series on digital finance and blockchain innovation, brought to you by the Digital Asset Management Academy, DAMA, that is headquartered in Garki, Abuja. Today is Wednesday, May 21st, 2025. May 28th, 2025. And we're thrilled to have you join us for what promises to be a powerful session titled Beyond Trading, Unlocking Passive Income Stream on Centralized Crypto Exchanges. So before we delve into today's discussion, let's take a moment to reflect on last week's insightful session, Cryptocurrency Understanding Centralized Exchanges. That was the topic of last week. And in that session, Mr. Moses Obaje, our AI prof, and Mrs. Shifra Puluma gave us a solid foundation on how centralized crypto exchange operates, their structure, benefit, risk, and how they compare to decentralized platforms. It was an essential primer for anyone looking to navigate the crypto ecosystem with clarity and confidence. Today, we take the conversation further. We are moving beyond trading to explore how centralized exchanges are becoming platforms for passive income generation, from staking and saving to lending, referral programs, and more. There is a growing toolkit for those who want to aim in the background while staying engaged in the crypto space. To guide us once again are two of DAMA's finest instructors, Mr. Moses Obaje, our AI prof, and Mrs. Shipra Puluma, as always, whose deep expertise and practical approach continue to make complex topic accessible and actionable. As always, please keep your microphone mute unless invited to speak, and feel free to drop your question in the chat. We'll address them during the question and answer session. As always, I remain Ibrahim Mourawasi, your host for today's session. And with me is my brother, Mr. Tochukwu Raphael, our co-host. Thank you for being here. Let's begin today's journey towards unlocking crypto passive earning potentials. And today we will start with the question that most of us are asking, most especially those of us who are not into digital assets. So, Mr. Obaje, I will start with you. Welcome to the program, Mr. Obaje.
All right. Thank you for having me. Good morning, everyone. Good morning, Mr. Ibrahim and Mr. Tochukwu.
Good morning, sir. In a continuation of our last,
we can't hear you.
Am I audible?
Yes, you are better off now.
No. We can't hear. I think there's a network glitch. In fact, my computer can't even join. Has not been. I had to tune onto my phone. My
Ma, you need to turn your phone to landscape.
no, I was using my computer, but now the computer is on.
All right.
What is happening?
Hello, am I audible now? Am I audible?
Yes, you are.
Yes, you are.
Yes, you are.
Yes, sorry, we're having some technical. So let me continue from where I stopped. Mr. Obaje, I said in continuation of our last week presentation, remind the listeners what a centralized exchange, especially for those who are just joining.
I can't hear you very well, Mr. Tuchuku. Oh, sorry, Mr. Ibrahim, I can't hear you very well. Can you come again with your question?
All right, let me come again. I said in continuation of our last week's presentation, remind the listeners what a centralized exchange is, especially for those who are joining us for the first time.
All right. Thank you, Mr. Ibrahim, for this opportunity
sir.
once again, and we're all welcome. Now, centralized exchange simply refers to digital platforms that facilitate the trading, buying, and selling of various cryptocurrencies. Now, it operates as an intermediary between users and providing an online marketplace where participants or crypto holders can exchange their digital assets for other currencies or for even fiat currencies. Now, like I said last week, all centralized exchanges serve as trusted middlemen or trusted middle entities. Now, they are businesses that provide exchange services for traders, investors, and users. Now, centralized cryptocurrency exchanges are regulated by governments of the countries in which they operate. So there is a regulatory body that is observing the activities of centralized cryptocurrency exchanges, unlike the decentralized exchanges. Now, they operate for a profit while providing these services that people demand or that make cryptocurrencies transactions more simple. And then some of the elements of centralized exchanges is that now it is owned by a single entity or a group of people. That is to say, it is governed by this group of people or that person who owns the exchange. They provide security measures for users. They manage user accounts and capital, and then they settle disputes for parties. Maybe there are disputes between a buyer and a seller of a certain digital asset. They tend to settle such disputes. And then they allow fiat and cryptocurrency exchanges. You can exchange a digital asset into your fiat currency, and you can exchange one digital asset for another digital asset. They also match buy and sell orders between customers. This one is trying to buy, this one is trying to sell. And once both parties are on the same page, they match these orders so that business can be transacted. They also collect identifying information about users, and then they place funds in escrow services to protect users. Now, in cryptocurrency, centralized exchanges allow people connected to the internet to buy, sell, and swap crypto assets. Like I said, it is owned and operated by a private company, which means it is subject to the laws and regulations of every jurisdiction it operates in. A centralized exchange requires users to sign up and open an account to participate. You must sign up and open an account with that centralized exchange for you to participate. And majority of centralized exchanges demand what is called KYC, know your customer. They demand anti-laundering ID verification for intending users to trade, so as to be in right traction with the governments of nations that these centralized exchanges operate upon. So that's a brief of the centralized exchange as we discussed last week. Thank you, Mr. Ibrahim.
Thank you very much, sir. Mrs. Poluma, our digital mama, coming to you. Tell us one way of making money on a centralized exchange, something practical that our listeners can. You are muted. You are muted, ma.
Okay, thank you, Ibrahim. And to our listeners and viewers this day, we welcome you to yet another session. Other than trading in a centralized exchange, there are other ways that you can earn outside of trading in a centralized exchange. One of these is promotions. There are trading competitions that some of the centralized exchanges do for their for anyone that joins them, though not all, but some. These trading competitions are done, the users compete to trade in a certain volume to earn highest. The one that has the highest returns is given a bonus. The rewards can come such as in tokens or cash prizes. We often find them in these centralized exchanges. For example, when you go to Binance, you see there are some promotions that are going on. And then we have equally referral programs. When you register you register in an exchange, they may have a platform for you that when you register and bring in anybody that registers under you, you'll be paid based on the transactions that that very particular person you have referred into the system does. And these referral bonuses or gifts that are given to you for bringing in people varies from probably free discounts, or it could range to a certain amount from their transactions all the time is paid back to you. And I think this is one or two of ways to earn in a centralized exchange other than trading, buying and selling in a centralized exchange. Thank you. Hello. Well, let me continue. Well, the benefit of these promotions or referral programs are to increase your earnings as a user in that very particular exchange. It's just like they are giving you some freebies to earn more money, to earn more. And it also enhances somebody's one's trading experiences, these promotions, because these events can take place. Probably sometimes they'll tell you it is Easter or it is Salah. They are doing a freebie for a certain number of activities you perform on the platform. And also, this freebie of promotions or referral system assists it to increase adoption for more people, to get more people into their platforms, these centralized exchanges. Thank you. Is Mr. Ibrahim there?
Thank you very, very much. Yeah, am I audible? Am I audible?
Yeah, you are.
Hello. All right. I would like to bring my co-host, Mr. Can you hear me? Can you hear me now?
Yes, you are loud and clear. You are loud and clear.
Can you hear me?
We can hear you.
All right. All right. I would like to invite my host, Mr. Tochukwu Raphael, to continue from here. Mr. Tochukwu.
Right, thank you, Mr. Ibrahim. I want to know if I am audible. Can you hear me?
Loud and clear, loud and clear.
Yes, you.
All right. We apologize for the truncation. We had rain not quite long ago, so I guess that's why we're having this issue. But I didn't hear what you said, Mrs. Poloma. You know, we are asked to respond to the question of the ways of making money on centralized exchanges aside of trading. But maybe I'll get more of that from Mr. Obaje. Mr. Obaje, could you enlighten us more on that? Other ways of making money on centralized exchanges aside of trading.
All right, just like you rightly said, Mr. Tochukwu, thank you. There are so many ways you can make money from centralized exchanges apart from trading. And one of such ways, Madam Poluma just mentioned about promotions and then referrals. Maybe because of the network glitch, we were not able to really get her. But for me, I just want to take a look at what is called staking, because it's another way of making money without trading on centralized exchanges. Now, many centralized exchanges offer staking services where you can lock up crypto to earn rewards. Now, you earn what we call yield just by holding and staking the token through the platform. Now, let me break it down. I want us to understand that staking is a fascinating concept in the world of cryptocurrencies that supports the functioning of blockchain networks and offers investors a way to earn returns through their digital assets. So by staking, one of the fascinating part of staking is that it supports the functionality of blockchain networks. Maybe I will break it down when we proceed. So, by definition, when you hear staking, it's a crypto process that allows network participants to earn rewards by locking their coins in wallets. Now, these coins are used to validate network transactions. That's why I said they support the functioning of blockchain networks. Because these funds are locked, they are used to validate network transactions, or they are used as a liquidity source. Now, staking is applied in networks based on what we call the proof of stake. All right? Now, the concept of behind cryptocurrency staking is similar to that of a fixed deposit account with a traditional bank, through which users generate interest. You see people say, okay, I deposited my money into a fixed deposit, and the bank, maybe I deposited it for, let's say, 6 months or 1 year, and after that 6 months or 1 year, there's a certain percentage of interest that the bank will pay to me because my money was on fixed deposit. So also it is with staking. There are a lot of similarities between staking and fixed deposits, because when you stake, your funds are locked in that wallet where you have the digital asset. Now, staking lets crypto holders earn rewards by locking their funds in a dedicated wallet. Like I said, it works a bit like a traditional savings account. These locked funds earn interest as long as they stay in place. Now, the size of your staking rewards usually depends on how much crypto you stake and for how long. It depends on the quantity of the crypto you stake and for how long are you staking that cryptocurrency. For someone who is staking $1,000 worth of a coin for 6 months, the earning will not be compared with somebody who is taking $100,000 for 6 months or for 1 year. So the size of your staking rewards will continue to vary depending on how much assets you stake and the duration you stake that asset for. And for you to start staking, you first need to set up the appropriate staking wallet for the respective project. Now, it's very much important to our listeners to understand that when you are staking, the coins are delegated. The coins are delegated. And this means they remain in your wallet and are not physically transferred. That is delegation. By delegating, you retain control over the assets while contributing to the network's security. Now, this process can be achieved directly by running your own validator node, or at the same time by holding the assets in a provider's wallet. You just don't go and stake, and somebody will tell you send to this wallet. All right, that is not staking. That is fraud. That is one of the scams that we once talked about. When you delegate your coins under staking, those coins remain with you. You see them, but you cannot use them to transact business as far as the crypto is concerned. You contribute to the stability and security of a network by staking, and in turn, you are being paid for that act of staking. Thank you, Mr. Tochukwu.
All right, that was great. So it is like a savings account, fixed deposit. When you save your money, it builds more money for you. Yes, but how long before I shift to Mrs. Poloma? How long does it take for you to start, reaping the fruits of your labor?
Now, it is instantaneous. It is instantaneous. All right. It's just like I said, the bank, when you put in your money in a fixed deposit account, all right, there is a certain percentage that you are being paid on that money. So also with staking. Once you stake and your staking is approved, all right, your earnings begin to accrue to you. It begins to accumulate based on the percentage that you agreed to take with regards to that staking. And that's why a lot of exchanges have different percentages with regards to staking. All right? Well, it's instantaneous. Thank you. Mr. Tochukwu, are you there?
We can't hear him.
Network glitch, and I think all of them are out of network. Both Ibrahim and Tochukwu.
Ibrahim is online, but know that Tochukwu is back. Tochukwu is back, but we can't hear any of them.
So, like I was saying before Mr. Tochukwu comes back, with regards to staking, it's one of the secured ways that you can make money legitimately without trading. But like I said, you just need to understand that it is delegation. Your tokens or your coins are delegated. All right. There's another way apart from staking to make money, which your coins are taken away from you. But in staking, your money remains with you, and they serve as a form of liquidity or a form of security to that exchange for stability. And that's why when you make some transactions on some certain exchanges, you'll find that they will tell you you are having maybe 10 out of 60 confirmations, or you are having 3 out of 12 confirmations. Now, this is because those who staked in their money need to check and confirm those transactions that, yes, this transaction is real. And if that transaction is expecting 60 confirmations, once 60 people who are stakers confirm such transactions, then you see that your transactions goes through. Either, most especially when it is between an asset to an asset, from one cryptocurrency to another cryptocurrency. That is where you see that coin or cryptocurrency arrives in your wallet, or that cryptocurrency that you are transacting on leaves your wallet. It is because the stakers are out there to observe, all right, and approve such transactions. So that's why they are there, because their funds are there to also stabilize the network. So thank you, Mr. Tochukwu. I don't know whether you are back.
Back. I am
All right.
back. Thank you very much. Though I didn't hear your last statement, but let's move on. Mrs. Poloma, can you hear me?
Yes, I can.
Okay, I believe there are more ways of making money. Could you help us with them?
Thank you, Tochukwu. Another, like we said, there are many ways. Other than the first two I mentioned earlier about promotions and referral programs that centralized exchanges offer. There's also an offer to earn through launch pool. What do we mean by launch pool? We have launch pool and launch pads. These launch pools and launch pads support new cryptocurrency projects. They allow users to participate in token sales or staking opportunities. Let me begin by the launch pool. What do we mean by launch pool? A launch pool is a platform where users can stake their existing cryptocurrencies to earn new tokens from upcoming projects. And here is how it works. When you stake your currency, such as maybe, let's say, B&B in a launch pool, it allows you, when there are upcoming projects, new projects to be launched, they may give you an offer that when you stake, you will earn an upcoming project you will earn tokens from an upcoming project. Then this token distribution that is done in the oncoming project, they are distributed to users based on how much you have staked. That's another way of earning. And the project tokenomics. And also we have what we call, the users can even earn tokens from new projects, often with potential for significant returns. Then we have what we call the Launchpad. The Launchpad is a platform that hosts token sales for new currencies that are upcoming. And they work in this way. New projects launch their tokens on a platform, and users can purchase before it is brought into public offer. It's just like companies doing their private offers before it becomes public. they give people opportunity to key into the tokens before it is brought into for the public to buy. So, and then normally with the launch pads and the launch pad and the launch pool, it allows a user early access to the token, just like we have in the stock exchanges and even in banks when they are doing public offer. Some, before they do public offer, they do private offers first. The same thing happens in a centralized exchange as well with upcoming new tokens. And so once it comes into public offer to the public, you that has keyed in first, you discover that if the token rises, it rises with you, you get the value. That's another means of earning because of the price appreciation of that very particular token. And then they could reward you for staking your funds in expectation of the upcoming new cryptocurrency that comes up on board. The launch pad and the launch pool have their own risks as well. Investing in new projects carries a lot of, significant risks. And not all projects may succeed. You'll discover that maybe at the private offering, it may be 0.10 cents. And by the time it is launched for the public to gain access to these tokens, the price may drop. So there's ample risk when you do that. So it is essential for anyone, engaging in the launch pool or launch pad because of the new projects coming on board, to do your own due diligence, do your own research on the project, the team, and the potential before you participate in any launch pool or launch pad. And also bearing in mind, like I said earlier, a token could be private offered at 10 cents. And by the time it comes into public purview, it goes for less. So it shows that there's market volatility. So one has to engage in due research. And so if the market is volatile, it can affect one's earnings. And so the earning may be, you may have to, then like I will always say, it depends on your risk appetite and your dream. So thank you. We can't hear you. We can't hear you.
I said, let me bring up my co-host, Ibrahim.
Okay.
Can you hear me? Thank you, Mr. Tochku.
But it's faint. You are faint.
And the voice.
The voice is faint.
Can you hear me?
Better now.
All right.
Better.
Thank you, Mr. Tochku. Excellent. You have done justice to the question, Mrs. Paloma. As they say, when one door open, another follows. So let's keep it flowing. Mr. Obaje, I believe there is still more. You talk about staking. What's another technique? Lesser known ways users can earn on centralized exchange. Let me come again. Give us another technique or lesser known ways users can earn on centralized exchange. Mr. Obaje.
All right, thank you, Mr. Ibrahim. Before answering that question, just like Mami Poloma is talking about the risk of launch pool and launch pads, I just want you listeners to know that through launch pool and launch pads, again, you can make a hell of money. Just as there are risks, all right, there are also advantages, because let's assume when they're having the private sale, you buy at 10 cents, and during the public sale, it goes to $1. Wow. So that will be good money for you. All right. So that's another very good avenue for you to make money without trading, as far as the centralized exchanges are concerned. Now, that being said, another way that I feel, okay, let me put it this way. Another way that resembles staking, where people can make money from, is what we call savings. Yes. Now, just like I made mention of the fixed deposit account, now I'm coming back to savings. Now, you can earn from centralized exchanges by having what we call crypto savings accounts. Now, crypto savings accounts is that account that lets you earn passive income on your digital assets. Now, instead of these assets sitting idle in your wallet, let's assume you have $10,000 of Bitcoin. I'm just giving an example. Now, and you don't have anything to use that $10,000 worth of Bitcoin for. At that point in time, you are not trading, you are not staking, it's just lying there idle. Now, what do you need to do? You can now have a crypto savings account. So instead of that $10,000 worth of Bitcoin sitting idle in your wallet, you send that crypto, Bitcoin to work for you. Now, centralized exchanges can take your deposit and lend it to borrowers. They can lend it to hedge funds or institutions, and in return, you earn interest. Now you can see, I talked about staking, and I said staking, the funds, all right? The funds are with you. You can see them, but you cannot do anything with them. But if you are having a savings account, your funds are taken by the exchanges, and then they lend it to borrowers. That is to say, it will go out of your wallet. Okay? They lend it to institutions, and then you earn interest. But the good thing about savings is that sometimes the interest rate is up to between 10 to 12% percentage yield, which is way more than traditional banks. And that's why if you are not having an immediate need, I don't see the need personally of keeping money in our traditional banks. I'll tell you why. All right? Because look at somebody who is now having a savings account. Like we all know, the money you go and deposit in your traditional bank account does not remain just there. They use it to transact businesses and then pay you interest because they do business. So you in the crypto savings account strategy, they also lend out this money. That means they are doing business with your money and then pay you interest. You earn interest on that currency. Now, unlike the fiat savings accounts, you can deposit Bitcoin, Ethereum, or even the stable coins, USDT, USDC, okay? And for example, if you pack one BTC, all right, one BTC, it will earn you 0.12 BTC per annum, which is about 12%. But in our traditional banks today, you will hear they are giving you 2.5%, 0.5%, 4%, and the case, what have you. Now, but with the crypto savings account, you can earn up to 12% annual percentage yield. We call it APY, without lifting a finger, without doing anything. And that's the power of cryptocurrencies compounding. All right? So how do these savings work? Now, crypto savings accounts function through lending, through staking, or decentralized finance protocols. Once you deposit, the platform loans your assets to institutions or retail borrowers. They pay interest rates between 5% and 15%, depending on demand. We know the law of demand and supply. All right. Now, some platforms also offer staking rewards, meaning you earn extra for just holding the coins. Now, you'll be paid for saving, and you'll be paid at the same time for staking. That has to come with some other platforms. So, like for Ethereum network, Ethereum 2.0, they lock assets to secure their network. And then you earn up to 6% for staking annually, while you also earn from your savings. Part of your money goes to staking, part also goes to savings. So you are making money from two different ways with the same quantum of digital assets you have. And some of these are operated by smart contracts, which automates the process, ensuring transparency. Unlike banks, but in crypto space, see, crypto can give you 20x return, 20 times return of your investment. So selecting the best crypto exchange with savings account is crucial for anyone aiming to generate passive income from their digital assets. Like I said, these platforms, they enable users to deposit their cryptocurrencies and earn interest, offering a smart way to increase your holdings, to increase your digital assets without engaging in active trading. So identifying an exchange that delivers competitive interest rates, robust security, and flexibility can greatly enhance your overall crypto investment approach. So when you are even going for savings, you need to look for exchanges that deliver competitive interests with other exchanges that has a very robust security and has a lot of flexibility so that it can greatly enhance your overall crypto investment. Now, exchanges like Coinbase, Bitpanda, Gemini, Binance, Kraken, and what have you, they are ideal for those looking to earn interest on their crypto assets. Whether you are a long-term investor or seeking to maximize the potential of your idle assets, please don't go and put your active assets that you might need soon. All right. When we say idle assets, it simply means assets that are lying without you doing anything with them in your wallet. So what are the factors that you need to evaluate when you want to go into savings? Number one, look at the interest rates. All right. Higher APYs, annual percentage yields. All right. Higher annual percentage yields mean more earnings. Once you see that the APY is high, it means you are going to earn more. Some platforms, like I said, even offer up to 15% annual percentage yield, but always read the fine print. always do your own research. However, rates can fluctuate based on market demand and supply. Number 2 factor to evaluate is supported cryptos. Now, ensure that your preferred cryptocurrency is accepted, because not all platforms support every asset. Some focus on Bitcoin and Ethereum, while others specialize in stable coins like USDT and USDC. Number 3 factor to evaluate is security features. Look for strong encryption and 2-factor authentication. Platforms with cold storage, multi-signature wallets, and insurance funds offer better protection against hackers. All right? And then look at also the platform reputation. How reputable is that platform? Read user reviews and check the platform's history. What are users of that platform saying? What is the history of that platform? Avoid platforms known for freezing withdrawals. You want to withdraw, they will tell you, no, you cannot withdraw now until the next 1 hour. Avoid such platforms. Avoid platforms that have what we call sudden shutdown. Before you know, they are off the air and then they come back. Or avoid platforms that have what we call regulatory troubles. They are having challenges with their government, from one problem to another. All right? If we could remember, there was one of these exchanges that collapsed in 2022. I think Celsius and BlockFi, they collapsed in 2022. So we should be very cautious with the type of platform where we go to perform savings. All right? So, and also we should look at withdrawal rules. For some platforms, they impose what is called lock-in periods. Lock-in periods requiring 30 to 90 days for higher return, for higher annual percentage yield. All right? Others like Binance and offer flexible withdrawals, but at lower rates. So there are some that we have what we call the lock-in periods, maybe between 30 and 90 days, and they give higher APY, annual performance yield. So, and also fees. Another thing to look at is the fees. Beware, please, beware of hidden costs. Because some platforms charge withdrawal fees, deposit fees, or even hidden service charges. Now, always review the full cost structure before depositing your funds in the savings account. Because evaluating all these factors carefully can help you choose a secure and profitable crypto savings account while minimizing risks. Thank you, Mr. Tochukwu. And maybe let me give the final verdict. Which one is right for you? You see, beginners, of which I know we might have some of them in this meeting, should start with centralized finance for simplicity and support. Because all these things we are talking, some of them are also happening in the DeFi space, in the decentralized finance. But I want to urge beginners to start with centralized finance because they can always get support, guidance, and if they have troubles, they have a support center that they can always lay their challenge to. So experienced users can exploit decentralized finance for higher yields and full control. Remember, if you are dealing with a centralized exchange, you do not have total control of your assets, but with decentralized finance, you have total control. So, like I said, always research platforms for security, withdrawal terms, and potential risks. And for higher interest with lower risk, consider diversifying both centralized finance and decentralized financial savings to balance earnings and security. Thank you. I don't know whether you are in the house.
Hello. Hello.
I think network has come again. But can you hear me, Mr. Obaje?
I can hear you loud and clear.
Okay, I continue. All right, thank you very much for the comprehensive account of that. Um, okay, let me ask a few questions. You talked about savings and staking being similar. Could you tell us the difference, distinguish between the two, savings and staking? I want to know the difference between them.
All right. Like I made mention, staking your funds, all right, you are delegating your assets. You are delegating your assets. That means those assets are still with you, but you cannot use those assets for everything because you've already delegated them. And then you have a function as one of the security observers of that exchange with regards to some of these transactions, most especially the peer where you state your assets for approvals. I gave an example that maybe you want to transfer maybe let's say you want to transfer USDT, which is a stable coin. Maybe I want to transfer from my wallet to the digital mama's wallet. Now, there are those who have already staked in their own coins so as to stabilize that market. Okay, all right. Now, they always take time to check, is this transaction valid? And every one of them approves. You will see in some of the transactions, they will tell you you have 30 out of 60 approvals. That means 30 people who have staked in their money in that project have already seen your transaction and have approved it, waiting for other 30 stakers to also look at your transaction and approve. And it happens in seconds or in some few minutes. But when you save your money, that money does not remain with you. That money goes out because others are there waiting to lend from that money, all right, and make use of that money and then pay back. And when they pay back, they are paying back with interest, all right. And remember, I said even in savings, there are exchanges that when you save your money, they even take some part and put into staking and leave some part for lending. So these are the key differences between staking and savings. Thank you.
All right, but what can you hear me,
I can
Mr.
hear you.
Obaje? What determines the interest one gets when one starts saving or staking? What determines or who determines the interest?
Now, remember I said that's what we call annual percentage yield. Okay. Now, what determines the earnings you get? Number one is the quantum of what you are staking or what you are saving. In my first speech, I made mention that someone who stakes $1,000 for 6 months and someone who stakes $10,000 for 6 months cannot get the same type of return. All right? And someone who stakes $1,000 for 6 months and another person stakes $1,000 for 12 months cannot get the same return. So it is based on your capital and the duration of your staking or your savings.
Very much, Mr. Obaje. I want to know if Mr. Ibrahim has come back.
Thank you very much. Am I audible now?
Clearly.
All right, let me continue. Mrs. Poloma, do you have any more to add to what's perhaps something you have seen work well in the crypto scene?
You know, we have a lot of other means of earning without trading, not only the ones that we've mentioned. And the other ones that we have, one of them is what we call liquidity provision. To be a liquidity provider, meaning you provide funds in an exchange that you will benefit from the buying and selling, because there are always offers. We have bid offers, that is your asking offer and your sell orders. These sell orders have what we call spread, meaning there's a size that we call spread, which goes to the liquidity provider and the exchanger as well. For example, you can place your buy with maybe, let me use the Forex term, pips. Meaning, I want to, if I'm going to buy, if it is, instead of $1.2 for a certain coin I'm trading, I will say if it goes to 1.2.5, meaning I'm ready to accept the 5% gain, the 0.5 gain, 1.05 gain. That gain is shared between the liquidity provider and the person buying or selling, and then the centralized exchange itself. So liquidity providers enhance the discovery of the reduced transaction costs. They promote the market stability as well. And then the liquidity, they are what we call market makers, because the activity in the bid and the asking price is for, ensures that there's constant flow of orders. And within this order, a liquidity provider can earn based on the transaction. Like I said, the bidding price or the asking price might be less than the selling price. And so the gap in between is what is shared. And as a liquidity provider, you stand to gain other than trading. And then I think basically that is what liquidity provider does. You provide funds to enable buying and selling between whoever that is on the exchange. And then at the same time, there's a margin, there's a spread that is kept out of the sales or the buys that goes to the liquidity provider as his own interest for providing liquidity on a particular centralized exchange. But like Prof said earlier, you have to do your due diligence before you put your funds in any exchange. Look at all the parameters. Check other exchanges as well. That will determine how you, whether to invest as a liquidity provider or not. And another thing is that when you provide liquidity, you know, sometimes you can buy cheaper in a certain exchange and go and sell higher on another exchange. That is what we call arbitrage, arbitrage trading. Arbitrage. So an exchange can buy cheaper at a lower price in another exchange and then sell at a higher price. So the margin after the transaction is what is shared as earnings for whoever that has provided that liquidity as well. Thank you. We can't hear you. We can't hear you.
Am I audible now?
Okay, yeah, you are.
All right. Now, before we open the floor for question and answer session, let's close the loop from last week's investment recommendation. Mr. Obaje, how is Body Scan AI, the token that you recommended for the listeners by last week, performing currently? Has it shown promises, offers some expected volatility?
All right, thank you, Mr. Ibrahim, for that line of question. Body Scan AI is still doing awesomely well. All right. The fact is that, yes, the market might be volatile, right? But when you have a good project, a project that has been properly scrutinized, all right, it is very, very rare to see that volatility sweeps it off its feet and it goes down to the ground. What do I mean? Goes back to where it started from. No, it's not that easy, because when you look at the use case of that project, all right, this is a project that has to do with mankind, life and death, which is health. It is a health-based project, all right? Number two, if you look at the, how do I put it? Okay, if you look at the spread of the holders, those who are holding the coin or the token, that coin is evenly distributed. It's in fact, nobody, you can go and do your research, nobody that is holding Body Scan AI that is holding up to 2% of that token. Look, assuming, let's assume that the first 10 top holders of that token today said, we are dumping this token. We are no longer holding our token. Body Scan AI will still stand gidigba. I don't speak one of our Nigerian language. It will still stand its ground. Why? Because they are holding just a few percentage. Cumulatively, I don't think they are holding up to 25% of the total number of tokens that we have. You understand? And if paraventure 25% said I'm not doing business and 75% said I'm still in the business, will the business survive? The answer is yes. All right? And the good thing, one thing that also keeps that token on its stand is the community behind that token. Because, in fact, thank you to DDM, because of some of the analysis we come to give out here, people come to us to seek more knowledge with regards to that token. And the community behind the token is growing. See, if you want to go for a project and there is no community backing that project, hear me and hear me loud. If you can run, that the back of your leg will touch the back of your head, run. Because over time, that project will go to sleep. But I want to tell you that the Body Scan AI has a very agile, active community behind it. Go and check their Twitter handle, they are active. Go to their social handles, go to Telegram, they are active. Go to Facebook, they are active. Go to WhatsApp, they are active. So that token is standing on its feet. And one thing I want people to understand, that This is a utility token. An application is being developed behind the scenes that can be used to scan the human body to detect early abnormalities in your body and offer advices, profile solutions. Maybe it might be a change in diet, maybe it might be your water intake, or you need to see a physician, you need to see a doctor for further medical advices and actions. That app is still being developed. And that's another news. The prototype of that app is already out. It's already out. A lot of people were saying, where is the website? We have not seen the website. We have not seen the tokenomics of body scan AI. The website is out. The tokenomics is out there in the space. Go and see what the devs are planning, what they are doing, and what they will still do in the nearest future. So, Mr. Ibrahim, I have a lot to talk as far as this token is concerned. As at this point in time, if you are part and parcel of the community, of the body scan AI community, and you are not holding enough of this token, now that the price is still affordable, please go and do. I said I can beat my chest and advise anybody to go and take on that project. Go and bag more. And if you don't have, maybe you are joining us for the first time, seek to join the body scan AI army. Get some share, because I bet you the world will still come after body scan AI. Most especially once this app is launched and you can see it on your Android, you can see it on your iOS device. The thing is that even if you have it on your app and you don't have the token, you cannot access the functionality of that app. So get it now. That's my candid advice. Thank you. Digital Mama also, she's part and parcel of the community, so you can ask her questions. But for me, it's a win-win situation for body scan AI. Thank you. Your audio is out.
Your audio is off. We can't hear you, Ibrahim.
Am I audible now?
Yes.
All right.
Yeah. Yeah.
All right. On body scan AI.
We lost your voice. Your audio is not
Okay.
clear. Yeah.
Am I back? Can you hear me now?
Yes, you are better now. You are better.
Okay. I say, Digital Mama, give us more about body scan AI.
Honestly, body scan AI is rocking. Because the community is at top speed. And this very token, honestly, since I invested, I have no regrets, because it meets all the parameters of a gem. And yes, the market fluctuates, which is natural. But the effect of the market dip on even formidable coins is far more than it is in body scan AI. Because when you look at the percentages, honestly, it means this is a token to beat. As far as I am concerned, I miss Bitcoin. And this is my own Bitcoin, honestly. Because when you see dip in even the bigger coins, when you look at the percentage in the dips they experience, that of body scan is far less. That is to tell you that it is a formidable project. The community is there solidly behind the project. You see us all over the social media doing one-on-one. The dev are very, very active. They keep communicating with the community. Like Prof said, last week, a prototype of the app was released to the community to have a feel and a taste of how that very particular app is going to be in the nearest future. So I think for anyone who is not yet on, who has not yet invested, no matter how little, the beauty about this project is that you can come in with any amount. You can come in with as little as $1 or even less to get at least a few of these tokens. You can choose to test run, or you can choose to be a risk taker and go all out by investing. And I'm sure you will not have regrets. In Dharma Academy, for those of us that have been privileged to be in Dharma Academy, we are being given ample knowledge about the space, the blockchain space. And Bodyscan AI fits into that criteria of owning a gem. For those of us that have missed Bitcoin and other upcoming coins, other older coins, now that we have knowledge, we have identified what our own Bitcoin is. Why? Because it has the potential to give you that 1,000x, 10,000x that you desire based on your dream. More so the coin, the token now is a low cap token. It is a low cap token. So it has the potential. Unlike the bigger coins, if you can't say you get 1,000x in Bitcoin or Ethereum or BNB. It's absolutely impossible, except if your investment is going to be in billions or millions or billions of dollars. That's when, well, if you get a 10% or a 1%, you will be okay with it. Why? Because it's a lot. But for people like us who have low capital, I believe keying into Bodyscan AI will make you get to that 1x, 1,000x, 10,000x once this very particular token hits 10 cents, $1, $10 in the nearest future. You'll have no regrets. Thank you.
Thank you very much, ma'am. Real quick, before we go to the question and answer session, I was one of the people that mine, Notcoin, Dogcoin, all these free coins. What's the difference between these free coins and Bodyscan AI?
You're talking about airdrops. Well, there's a marked difference between airdrops and this very particular token, Bodyscan AI. An airdrop takes your time, your energy, your resources. You have to put data as well. Sometimes some of these airdrops now demand that you do some little transactions. It may look little, but when you look at the number of people that are doing that airdrop, it's something significant. And these airdrops can decide to give you dust. What I mean by dust is that by the time they release it for you, it may amount to nothing. When you calculate the data you spend, the length of time, the months you've spent, thinking it is free, it is actually not free. But with Bodyscan AI, you are investing, even if it is $1, you know the quantum of size of tokens that you're going to get. And then you keep. based on the size of your dream. If you want 10,000x, if you want 1,000x, when it gets to that, you can choose to, sell off. It's okay. Or you can choose to keep till it gets to $1 per token. So there is a marked difference between airdrops that give you dust in the end, that end up not even having any utility at all. Yes, they may have community, but then it is the developer that maxes every other person that engages in the airdrop. He maxes on them because it's possible. The quantum of people coming into an airdrop is trying to get something out of it as well by your presence, by my presence being on the airdrop. So you are not really like having an edge over that very particular developer. So there's a marked difference between airdrops and body scan AI. Body scan AI already the token is existing and there's a utility case behind it. It is low cap. And there's a community behind it. You are in touch with the devs all the time. They don't give you tasks that are sometimes very difficult for you to, to keep, like those airdrops do. Some airdrops might tell you you need 50 referrals, but for anyone coming into body scan AI, nobody asks you for any that you must refer before you earn. No. But you are only expected to engage as a community member by doing even tasks on social media because you are seeing what body scan is. You can talk to somebody, but it doesn't mean, you will not earn because you have not referred, as we have in airdrops. They won't tell you that you must add a certain amount, do a transaction in ton before you move to the next level. It is not tedious, it is not tiring as airdrops that may end up giving you dust. Thank you.
Airdrop is hustling now, and Nigeria's Africa's must hustle. All right, but body scan is an investment. Okay, yeah. You become an investor, which means you are in business. All right, you are not hustling. See, even in Freetown, there's nothing that is free. At all. So even if they tell you airdrop is free, it's not free. Even in Freetown, nothing is free. Thank you. It seems we have lost our host. I'm not seeing any one of them. Okay, before they return, I think let's do something. I saw somebody raising hand, Madweke. If it is a question, you can come up with your question so I will take your question before our host returns. Madweke, your hands are up.
Okay, good day, everyone.
Good day, sir.
Thank you for the good work. Because I've listened to your discussions and the way you present these things, expertly. I am moved. I just want to ask, because I heard you mention that Scan AI has a community, and in cryptocurrency world, it's largely anonymous, and because of that, when especially for those or some of us newcomers, we find it difficult to get along. But I believe that with community, people can be carried along, and then they will make the best out of this wonderful ecosystem, that has a lot to offer, humanity. So my question is, how can I join the body scan AI community? Because as a new person now, I need to know some certain things before I fully go into this thing, because I also had a little experience, some of like the one you mentioned now, mining I mind Shiba Inu. I even referred people, but up to today, I don't know the head and tail of it. But if I were to be in a good community, I don't think I will, because Shiba Inu, from what I had, ended up making a lot of people worthy. So that community is important. How do I assess the body scan AI community, please?
Okay.
I think Mr. Tochukwu is back. I think he has the capacity to answer that question. Mr. Tochukwu, that's the question. How can he join the community?
How can he join the community? I didn't get the question.
That's the question.
Can I
He's
repeat?
Okay,
Okay,
repeat
go
the
ahead.
question, please.
Okay, I'm saying that community is important, especially for the adoption of body scan AI. For one, I did some certain things before, including mining, like you have just lately discussed here. But I just mined. I even referred people, but at the end of the day, I didn't know how to go about it, and I didn't get anything because of that. But body scan AI having community, I believe that if I join it, I'll be able to get a headway and not just to dabble into it. So how do I join the body scan AI community, please?
Mr. Baja, I think you are in a better position to answer the question. Mr. Baja, the body scan AI.
I think there's Mr. Madueke will drop the